Okay, everyone, welcome. I'm going to do a closing market wrap video just to really point out how the market closed today. It's there's some technical developments that took place that I want to point out, and so we'll get right into it. Leave me a thumbs up if you guys find value. Hopefully, I'm able to get over 500 likes on this video. All right, so here we go. We'll start out with the triple Qs. It was really the star today in terms of the sell-off. And this is the one that I've been focusing on. I put out a video a couple days ago saying the Qs looks like it's going to break down, and this is where I was going to short. I typically short the triple Qs when I see a market sell-off. Although I might look at the IWM here in the near future. So here's your bull market really for the entire 2009 bull market. We're looking at a weekly chart, so every single candle in this chart is a week, and we're going back to 2009. This was the upward price channel that the tech sector has been in. So tech is still in a bull market. I can't deny the fact that tech is not in a bull market. It has not broken its bull market trendline support. So when you look narrowing it in closer, here's your 2018 drop where the Fed stepped in right here, and then here's your COVID drop where the Fed stepped in right here. So each one of these drops the Fed stepped in, and what it's caused though is an overshoot to the upside of the channel. So I think at minimum, what I'm expecting, I don't know if it's going to happen from this sell-off. Maybe we go farther up. But I am expecting at least we come back down and tag the bottom we fall back within the channel, basically. We're in an area where this is a low probability area. If we keep going higher from here, it's potentially a blow off top. And so that's just something to keep an eye on. Now, you can see, why do I think we're going to go down? Well, the momentum indicators tell me that we're going to go down. I don't know when, but if you look here, you can see negative divergence. So momentum on the weekly chart, you had a lower high than the previous high right here, and we continue to work our way down in the RSI momentum indicator, and yet price had continued to move higher. So that's a divergent high. Price is diverging from momentum. Oftentimes, they need to come back together in one way or the other, and that usually is price moving with momentum. So I'm looking for price to continue down and at least come down into the bottom of this price channel. Now that's longer term stuff. Let's go ahead and start narrowing it down into the shorter term stuff. So here's your hourly chart. This is what happened today, and you can see here's your bearish rising wedge right here on the hourly chart. So we pointed that out a couple videos ago. I've been talking about this rising wedge, and I kept saying I was looking for a sell signal or a short trigger, and that would come in a break of this trend line right here, this lower trend line that we've been walking up. Well, we got that today. So there's your hourly breakdown, and that was that's your sell signal basically, and you got the breakdown. Why did I see, why was this likely to break? Well, a couple things. We had the bearish rising wedge pattern. Those patterns typically resolve to the downside, but equally we had bearish divergence right here. See the divergence? How the momentum basically continued to sell off and drop off, and yet price was moving higher. So here momentum's dropping off all through here, while price was working its way up within this bearish rising wedge pattern, which signaled that it was a high probability that we were going to break down or have some sort of a sell signal. And we got that today on the hourly chart. Let's look at the daily. So the daily here, clear breakdown. That's an impulsive breakdown and sell signal. You have a daily close and a violation of this trend line support right here on the daily chart. So whether we work, get a little bounce tomorrow, maybe close the week with a little bit of a kickback rally or bounce, we're still on a sell signal, which means it's likely that we work our way, we start a trend down. This sell-off isn't a one-day event. We could bounce higher, but ultimately I think we go lower in the short term. Also look at the daily here, negative divergence right there on the daily chart. So the chart is basically, you've got negative divergence on the weekly, on the daily, and on the hourly. That's pretty bearish across multiple time frames. And we're starting to see, and we just got our sell signal on the hourly chart and the daily chart. So we are starting to see price move in the direction that the momentum indicators have been telling us that they will go. And we're starting to see price do that. So keep that in mind. Let's move on to the SPY. SPY didn't break down. That's not really a sell signal on the SPY. So let's go to the weekly here, give you the bigger picture. Look, we've had big negative divergences building for a while on the weekly. Now, that's not a reason to just get short. When you have a negative divergence on the weekly, you don't just short because you have a negative divergence. It just tells you that momentum has been fading since all the way back here in 2018. So each one of these new highs has been made on less momentum, and it's shown here in the RSI technical indicator. And so divergent highs on the weekly, all right? Then you go to the daily, and you can see divergent high. Well, actually, going back to the weekly real quick, and let me point this out for anybody that's new. Here's your 2009 lows right here, and this is a weekly chart. And as you walk up, here's your trend. So you have trend line support, you held support there. Trend line support, you held it there. Trend line support, you held it right there. And then you held it again through a cluster of weeks right in here. And then in 2018, we started to have liquidity issues with the repo crisis, and we broke trend. So the Fed was raising interest rates and reducing their balance sheet through here. It was too much. It broke the trend. They reversed course, and they've basically been trying to keep the market propped up ever since. But they haven't been successful. All they've been able to do is just run this up for a back test of the broken trend line. Then it failed for the COVID drop. Again, I've been bearish this entire time since we broke this trend, and which is the entire life of this channel. So many people will say that I've been bearish forever. Well, I've been bearish for the life of the channel. So yeah, that's because we broke bullish trend. We broke the bullish trend. And yeah, we've had a back test and another back test. And yeah, there's opportunities to be long and trade those. And I have taken long shots, but in general, I continue to look for short entries because we're below the major trend. So and then here's your COVID drop, which was priced into the chart. This I got short right up in here because we were back testing major trendline resistance and rode the short all the way down. I was able to get long down near the lows because we had bullish divergences showing up. But I did not catch this entire rally here. Okay, I'll admit that. I exited my longs somewhere right in here, started looking for shorts up around 295 or so. And then, I've been looking for shorts since. So yes, when you want to look at the, kind of the last few months, I haven't caught the entire rally, but this is the bigger picture stuff. So I think it's important to realize. And now where are we? Well, we're just off of the trend line right here. And we're just a couple percentage points off, about 3. Again, when everyone's looking at a trend line like this, then you might not get there. You either overshoot it or you undercut it. So I don't know which ones it's going to be. We could obviously rally here and continue higher and have an overshoot. But I think it's likely that we actually don't even get up there. I think it's likely we just fail somewhere right in this area and start to roll over. And again, it has the potential to be the top of the market. And we could potentially roll over. Now, I don't think we're going to just collapse. I don't think it's going to look like this COVID drop. That's really irregular. I think it's more likely that we kind of work our way lower over time. And yeah, that's how I see that playing out. Let's look at the hourly here. You can see on the hourly on the 60-minute chart, we broke this trendline support. So we had a bearish rising wedge right there. We have negative divergence right there, really starting to show up. And so it was telling you it was going to break, and we just started to break. It wasn't that impulsive, so we'll see how this plays out. But that was a break and, kind of a sell signal. Not the best sell signal, to be honest, because I like to see something more impulsive on the SPY. But we got it there in the Qs. Looking at the daily chart, we've have negative divergence right there. There's your negative divergence on the daily chart. And look at the PPO. As I zoom in, you can see the blue line is about to cross bearish on this orange line. That's your bearish crossover. We're just about there. We'll see how tomorrow, if there's continued selling tomorrow, we'll get that bearish crossover. And likely that will give you the daily breakdown and sell signal as well. Here's your trend line on the daily chart. Bearish rising wedge, negative divergence, everything's set up bearishly. It's just price. Price is the only thing that hasn't really fully triggered yet. So if you get the bearish break of this trend line and you get the daily close, that's a sell signal in the SPY. So watch for that, because now tech has triggered. So tech could, maybe tech rally, we bounce a little bit in tech, get a little relief rally, and the SPY hangs in there. And then maybe next week the SPY breaks. I don't exactly know what'll happen. All I know is we have bearish setups across the board, across multiple time frames, and we look for price. I don't want to be long when I have a bearish posture across multiple time frames. I'd rather look for short entries. Looking at the small caps, I don't see, this one's not bearish as of right now. So we've got positive momentum. There's no bearish divergence. You've got, bullish momentum and bullish price. So this, I don't see a sell signal or anything playing out in this as of yet. Yes, we can just break down without bearish divergence, but there's not a bullish or a bearish setup in this. So, it could continue higher. However, with tech being where it's at, I don't expect the S&P 500 or the small caps to go much higher if tech is going to sell off. Tech is 26% sector weighting of the S&P 500. So without tech, the market's not really going to go anywhere. It might go sideways, but it's unlikely to go higher without tech. Let's look at bonds here. Long-term 20-year treasuries. Bullish divergence here on the daily chart. So you can see that bullish divergence continues to build. We don't have a bullish crossover yet on the PPO, but we did get it right here. So that is a bullish crossover right there. And bonds are hanging in there. Why would bonds hang in there? Well, if the dollar is going to move higher, bonds are likely to move higher as well. And that's really as simple as it is. So we'll see how this plays out. I would still wait. Personally, what I'm waiting for is kind of a break above this 160.33 and really a break above this 161. So it has a little ways to go, but we get the bullish break above that and a close above it on the daily chart, then that likely sets the bonds up to at least move up to this 172 area, possibly higher. Gold. All right, so we'll talk about gold. So I have talked, I pointed out when I started going long Barrick Gold just a couple days ago or a week ago that gold hit long-term support right here at 1790. And we're looking at a daily chart. That support comes back to the last bull market. So that was the resistance line of 2011 and 2012. This was an overshoot. You only have one reaction there, but then you had three reactions here. Tagged it there, tagged it there, tagged it there. That sets that as a resistance. And look what happened when we get above that resistance recently. We had a nice, launch or impulsive buy signal, basically. So that's a breakout. Now, can the breakout fail? Sure, it can fail. But what's more likely is we came back down for a back test. I had been talking about a back test of 1790 for months, basically. All this price action here, I said, I'm not bullish on gold. I think we're coming down to 1790. We overshot it here. This was a bull trap. You overshoot it, and then we instantly failed. So that's a bull trap, traps the bulls in, and then sells off to 1790. Now that we've gotten there, I'm expecting this area to hold. It's not specifically going to be, we're going to hold right here at 1790. We could go a little bit lower than 1790, but I'm expecting this kind of larger area as a buy zone. And what I'm seeing so far, let's say we sell off a little bit more and undercut 17, the lows right here, just barely undercut it, maybe 1770, something like that. If we do it soon, we're going to have that bullish divergence, which is this line that I have. So I'm expecting that. That's what I think is going to happen. I think we undercut slightly, put in a bullish divergence. That's going to be a buy zone. and then we start to set up bullish for the next swing trade higher in gold. So miners in general will should follow the price of gold bullion. They should sell off. You can see here in Barrick, this is kind of my gold mining proxy of choice. And why do I like Barrick? Well, Barrick's not indexed to the S&P 500. So if I think stocks are going to sell off, I don't want the selling pressure of the S&P 500 to hit my Barrick position. And so here's the thing. You've got on the daily chart, you have, we hit support, and I bought right down here when we were, hitting that support in gold bullion, but we never had bullish divergence. And I pointed that out. I like to see bullish divergence because it usually is a bottoming pattern, or it's the leading indicator to a bottoming phase. And so I could see us easily coming back down, undercutting the recent lows around this 2240 area in Barrick. I talked about it, after the bounce. I said, look, we could easily come down. So let's say we get down there soon. We're likely to then create that bullish divergence in Barrick. And so I will likely be adding to my position, if we get down there and put that in. Now, that is gold. Moving on. Okay, let's look at the financials. These have been strong, but they are possibly poised to sell off. You've got I've got two trend lines drawn out, kind of the longer term. This is coming off the 2009 lows, and it just kind of ramps up like that. That shows that we broke the bull trend back here in 2018, which I think is still valid. And I think, the bull market, if you look at this from a strictly bear market kind of perspective, then, in 2018, we basically broke. You can see here in 2020, we made slightly new highs, but we're making lower lows. So if we stop here, this is going to be a lower high. And if we roll over, then potentially, we're downtrending. So keep in mind that there is the potential for that. Bringing back my trend lines. So there's a break of that trend line, and then we kind of did a back test, never fully got there. Then we dropped again, and I've got a secondary trend line coming off the 2011 lows. So you got a reaction there, a reaction here, and then, we can move it up slightly higher, maybe something like this. Couple reactions right in there, and then a reaction right there. It's not my favorite, so again, that's why I don't, I'm not really trading the XLF against this trend line. But what I would be looking for is looking for some of the tighter time frames. Let's look at the hourly here, see what this looks like. You can see clear negative divergence. See it right there? It's there, and equally, I think this is probably divergent price action. So you've got momentum moving down, not making new higher highs, but lower highs in the momentum, and yet price continued to make higher highs. This just signals that the momentum was fading, and it's essentially like you're reaching the equilibrium point and about to shift into sellers. So the buyers are drying up, the sellers are starting to add up and pile on, and that's what this divergence is showing. And then the price finally hits that equilibrium point, and then you start to sell off. Looking at the hourly chart, yeah, we broke, this trend line. Here it is, reaction, got one there. And then right there we broke, wasn't impulsive, so it's not good enough for me to say that's a sell signal. I like to see an impulsive breakdown, whether that comes in the form of a gap down or, an impulsive sell-off. That's usually your trigger, and so we don't have that yet. Now, if we do get that, you got a gap down here. See that gap right there? Very probable that we fill that gap, or at least come close. And I would say that's probably falling around 25, 40, somewhere right in there. Again, if the financial, if we run down and fill the gap, then maybe we can bounce off of that, but we'll look at that short term and see how that plays out. Looking at the daily here, you also have negative divergence in the daily chart. Here it is. The only one that basically doesn't have negative divergence is the IWM. But you can see here we're making equal highs basically. It's actually slightly lower, but we'll just call it equal, and yet higher prices. So divergent high. We did not, this rally, it just shows that this move here, this price action moving up, was not on more enthusiasm. It was on kind of equal enthusiasm, and yet prices are a lot higher. So, the probability is that we break. Now, I'm not seeing it yet, so this one's still on the back burner. It's just something to take notice of and maybe be on the lookout for it. And energy, I think we're done with the energy. I mean, I'm done with the energy trade. So here was a bullish divergence back here on the daily chart, signaling that this was likely to have an uptrend. And I started to get long the energy sector. I put out videos covering oil stocks down in this time saying they look bullish. And then we had the breakout. So energy from the breakout rallied a total, well, considering today, 40%. But we now have bearish divergence. See the negative divergence right there on the daily? Clean and clear negative divergence. We've got higher highs in XLE, and yet it's on less momentum. So we're starting to put in that bearish divergence. Usually when you get that, you start looking for exits or breakdowns. So I think that's about it for XLE. And again, this pattern right here was your island cluster reversal pattern. These are bearish, these are topping patterns. And, typically, you see those and then we start to sell off, which is what you got. Now, this looks like it was a kickback rally. They ran it all the way up almost to, they didn't quite get to the gap area right there at about 42. So maybe we go a little bit higher up to that 42 area, maybe even up to about this 43, 43, 44 area. I wouldn't want to see it much beyond that. If it's much beyond that, then I would say it's still bullish and it's likely to burn through this negative divergence and make a new high and something like that. But as of right now, we have negative divergence. We've got what looks to be like coming close to trendline resistance. The gap right here is really going to be your resistance, so it's about right there. And sometimes they can overshoot it and chop into the area as they're running stops and do a stop raid basically. All right, so that's energy. As I always point out, watch FANG, because FANG stocks are basically the market. Where FANG goes, the market's going to go, because they're so heavily weighted in the indices and the ETFs. And lots of different ETFs have these FANG stocks. So Apple sold off. I mean, FANG pretty much sold off across the board today. Nothing crazy, nothing major. It was an outside day, so keep an eye on that. See the candle, how the highs and the lows fully encompass the previous, actually several previous candles. That's an outside day. That can be a reversal candlestick. What you look for to confirm that is a confirming candle. So do we get a more selling tomorrow? Then that helps confirm that was a potential topping stick. So outside day there in Apple. Microsoft didn't have an outside day, just some more selling. To me, Microsoft's just sideways. It's gone nowhere since July. And so you can see it's basically just been dead money. And that is either telling us that these things are run out of steam and that's it for the move up, or it's just consolidating and building time and energy to make another move higher. Time will tell on that one. Amazon, same thing, sideways, potential head and shoulders pattern. Head and shoulders patterns often come at the end of extended bull runs, and then inverse head and shoulders come at the end of extended sell-offs. So this, I would say, is definitely an extended bull run. You can see here coming off the March lows all the way up here. And we've got the head and shoulders. There's your head, there's your shoulder, and it's a complex head and shoulders because this, we have kind of a secondary shoulder here. But again, it hasn't really overtaken the head, and it's still keeping the pattern construction intact. Google here. Outside day in Google as well. You can see that the high and the low, and we basically closed below the previous trading range of the previous day. So outside day, potential topping stick, look for a confirming candle. Philip Morris, I can admit I didn't catch this one. So I would be looking for a pullback to about 82. That's a potential buy area. But this looks kind of like the real deal on a bull run. Here's what I got on this one. You got a downtrend going back to 2017. We're in the downtrend. We broke out to the upside, ended up being a bull trap, broke out again, They made it look like a bull trap. It dropped back down into the range, but it's since broken back out, and it's pretty impulsive. You can see that's a pretty impulsive breakout right there. Volume is increasing. See the upward momentum of volume, so there's more and more participation. Also on the RSI, there's no bearish divergence or anything, so bullish momentum, bullish price action. Looks bullish to me. Where's this go? Well, here's the thing. We got a big gap all the way up here at about 114. So I would say that's probably a pretty viable target to get up there. So what I would be looking for is this one, I'd probably be looking for some sort of an entry. And you'd want to buy pullbacks to support. So I got support right here at 82.62. A pullback to that would be a potential area that you could get involved in this thing. For a trade up to gap fill of 101. Okay, PayPal here. Everyone knows I'm short PayPal. I've talked about this. And so, yeah, you can see pretty bearish. That's a bearish engulfing candle. And that is a reversal candlestick. Now you got to wait for confirmation. I always take the reversal candlesticks and I look for a confirming candle, a secondary confirming candle. So we'll wait to see what happens there. But bearish engulfing, and you can see it engulf the previous 8 days basically. So about 2 weeks worth of price action were bullish. People were saying, oh, how's PayPal doing? Well, 2 weeks of all that kind of grinding around action, which I was saying what it was doing, were just wiped out in 1 day's worth of time. Now, if we get confirming sell-off, then that'll continue to do some more damage. This is a bearish setup, and I think we go lower. We've got a gap down here. See this big old gap all the way down here at 129, or it's about 130. That's where I think we head, and that is a drop of about 38%. So that's my target. Big bearish divergence on the daily. See that? The big bearish divergence. And that's been building for quite some time. Really, it started building. This is where it started, but we didn't know it was a bearish divergence till here on September 2nd. And so that's been intact since September. It's been building and building. Now, we start to look for price action to start heading down, which is what this divergence is telling me. PPO is pointed down. We don't have that bearish crossover yet, so look for the blue line to cross below the orange to give you that confirming bearish crossover, and that is what we're looking at on that one. NVIDIA. All right, I've been talking about this one. Looked like, I pointed it out that it was breaking. We first looked at the hourly, and we broke bearish right there, and then you can see that basically kickback rally yesterday, and then we continued to the downside. So bearish action across the board. Looking at the daily here, negative divergence on the daily. We also had negative divergence on the hourly. And so I think we continue down. Where does this one go? Well, first stop I think is probably right around this 476 area. It's not the cleanest area. We had a couple violations of it, but we'll just call it about 476. And then we likely to get a reaction there. And then we break and head down to about 432. So we'll continue to watch that. But the momentum is down. Looking at the PPO, bearish crossover. See it right there? The blue line just crossed on the daily chart below that orange line. So that is that's a bearish crossover. So we have bearish price action, bearish divergence, bearish PPO crossover, bearish PPO divergence, like that. I think this one heads lower. Someone asked me about Redfin. I am not short Redfin because when we started, here's what I didn't like about Redfin. So I took a shot at it the other day. All right, we broke bullish right here. And then it started to fade. And when it faded back below the resistance line, that's where I took a short on it. But then towards the end of the day, they popped it back up and it closed right above that resistance line. I covered and got out right there because I didn't like that price action. If this was likely to break down, it would have done it right there. Because you already had the fake out move. You already had popped above resistance and then faded back down. So to come back above, I got out, and yeah, it's popped up. So we'll just watch this one. I don't see anything on the hourly that's bearish, but look at the daily. Yeah, you've got you do have bearish divergence, and this was a divergent high, it looks like. Yep, it was. So maybe that's the end of the road. I would just wait for a break back below this trend line right here to confirm. But you can see here bearish divergence. So this recent high made a new, slightly marginal new high, just barely, and it was a divergent high, which was lower than the previous momentum on the RSI. So maybe that's it, and yeah, you have a doji candle right there. So look for confirmation, look for more selling. They're probably going to sell it down to about 52 tomorrow. And then, and then it might chop around for a little bit, and I'd wait for that bearish breakdown. That's what I would wait for. Carvana here, you can see here on the daily chart, big bearish divergence. It's just been building really since back here. And we are in this bearish rising wedge pattern. See the wedge right there and there. We've just continued to kind of tag resistance as we work our way higher in the wedge, building on this bearish divergence. Now, if you go to the hourly, we've got negative divergence now on the hourly as well. You can see it here. Let me clear this one out. And then here it is right there. See how the momentum is moving down on the hourly, and yet price was moving slightly higher. That's a divergent high right into major resistance. And now we have divergence on the hourly. So I think we start to move lower. Etsy here is still above trend. So here's your trend on the hourly, and we still holding trend. So when I look at this, I think I think most of these ones that are bullish, that are still holding trend, will likely break. But again, you got to do your own analysis on. I can't cover every single stock. I'm just trying to point out the ones that look interesting and the ones that I've really kind of pointed out in the past that I've been involved in. Let's look at SQ here. SQ daily. All right, SQ, bearish divergence. This is a really clean bearish divergence. It just continues to build. Momentum has just been dropping, and yet price has been moving higher on less and less participation. So that's basically each one of these highs has been a divergent high. So we were looking for a breakdown, and you can see we're, nice solid sell off today. Nothing crazy. Here's your hourly breakdown. We just we broke it the other day, we did a back test, and then we're failing. So I think we continue lower. I mean, ultimately, I wouldn't be short this thing if I didn't think we were going to go lower. So we'll watch this. Okay, Peloton. I took a short position in this one today. Here's what I like about this. So there's a couple things I like, and there's a couple things I don't like. For one thing, there's no bearish divergence on Peloton. There is bearish momentum. You can see how the momentum has been dropping like that, but so has price. So price has also been dropping. So it's not diverging from price. It's price is moving with momentum. So ultimately, I think we're just in a downtrend is what this looks like. Going to the daily here, this is trendline support. It held for several days, and it just broke today. So that's a sell signal. Nice solid close below trendline support. I think we head lower in this. Where do we go? Yeah, I'll have to probably tighten it up and get some levels out. Possibly right here. We'll have to kind of look. Let me do a little homework on that one, and I'll kind of bring it back up in another video. Maybe this 79.42 area. Okay, Qualcomm. I am still short Qualcomm. Where did I get short? Right here. I got short right there at 146.80. Obviously, it's gone against me a little bit, but nothing outside of, appropriate risk parameters. The technicals still look in shape. Everything looks technically bearish. You can see bearish divergence right there. So you got bearish divergence that continue, and really this divergence extends all the way to right here. So you have bearish divergence. You have and we've just been walking up this price channel. Now, this one is a little bit more of an aggressive trade, and that's because we haven't broke this price channel here. It just continues to move up in this price channel. So one way you can short or take a trade, I guess, is, if you're trying to short, you can short at resistance, which is what I've been doing, or you can wait for a breakdown or a sell signal out of the price channel. Obviously, a breakdown or sell signal, depending on when you can get it, is more conservative. It's a little more of a confirmation, and it's more aggressive if you take it up here. But, there's a risk reward to everything. keep an eye on this tan. I think there's a trade here coming shortly. We need a sell signal, but you've got big bearish divergence building on the daily. You have, look at the PPO, you've got a bearish crossover right there. See it? You have bearish divergence on the PPO as well. If I can mark that out. And you have an uptrend or a trend line. So very easy trade. You know, this one's very clean and clear. They're not always this clean, but you've got this uptrend line. You wait for the sell signal or a break of this trend line. It's likely going to come in the form of a gap down. And so that would be your sell signal. And that's what I'm looking for. Okay, that's all I got for everyone. Long video, but just wanted to go through and cover really a lot of the key concepts of kind of the market and what I'm trading under right now. And, you know, hopefully that gives everyone kind of an idea of where I'm coming from in terms of my bearish outlook and also some of these trade ideas that today are working. Doesn't mean they'll work tomorrow, but today they all, you know, most of them worked. And so we'll continue to point those out. Again, leave me a thumbs up. Take the course. If you haven't taken it, it's in the description below, and I'll catch you guys on the next one.